Meditators, today you will benefit from deep dives into the bull case for Ethereum, the opportunities a bear market can bring, and how our guests built one of the most successful DeFi media outlets. Sharing his knowledge with us today is David Hoffman. He is a founding father of the Bankless newsletter and podcast designed to help the community replace banking and navigate the Ethereum space. I love when a guest shows true passion for what they do, and David did exactly that. His enthusiasm for the space is incredible and translates into the knowledge that he shares with us. If you want to improve my enthusiasm, remember to like and subscribe below. To stay one with the crypto markets, sign up and receive 6 free Market Meditations newsletters a week. You'll find a link in the description below. A quick thanks to our partners Exodus and Nexo for making this podcast possible. There will be more on them later. Meditators, welcome to another episode of the Market Meditations podcast. Today we have with us David Hoffman, one of the most enthusiastic ETH bulls I know out there and founding father of Bankless newsletter, one of the best reads, which you guys should definitely check out. David, thank you so much for joining me.
Oh, happy to be here. I love being on the other side of the interview sometimes. So this is going to be a fun time.
Yeah, likewise. I like having people who have interviewed as well because it just makes for a more natural flow of conversation. The nerves are a lot lower. So, David, can you give us a quick roundup of how you got into crypto, dive down this rabbit hole?
Yeah, totally. I was working my way towards grad school for physical therapy, and I was a broke student, had little to no money, and needed to figure out, to get into physical therapy school, but also I wanted some passive income opportunities while I was doing grad school. And meanwhile, this is in 2017, all of the gaming subreddits were like pissed off at these miner people that were buying up all the GPUs and making the GPUs really expensive. And I had like a GPU in my like gaming computer. So I was like, well, why is everyone all up in arms about these GPU things? And so I figured out that like I could mine this thing called Ethereum and get like $4 a day, which $4 a day, like that's what people try and cut out when they like don't go to Starbucks every single morning and they brew coffee at home, right? So like, oh, $4 a day, like this could turn into something. And so I scaled up that operation and made 4 mining computers and put them in different corners of my father's house because I was living with my dad at the time. And that got me like into the world of Ethereum. That kind of led me down the Ethereum rabbit hole. I was watching Vitalik videos, reading white papers. It was the ICO mania, so there was a ton of energy, ton of attention, lots to like learn about. And I'm a perpetually curious person. So when there's an industry that is a industry full of learning, that kind of piques my attention. I saw that the ETH Denver conference was going to happen in February of 2018, so I applied for that. Didn't really know what I would do there, but kind of wanted to just, feel out what this whole Ethereum thing is in person. And I also needed to go tour a physical therapy school in Boulder, Colorado. So flew out to Denver, went to the conference, and it was a 3-day conference, Friday, Saturday, Sunday. And on Sunday, I was planning on skipping the conference and going to tour physical therapy school. But after getting there, meeting the people, listening to conversations, just overall feeling the vibe of the Ethereum community and the Ethereum culture and what was going on there and the types of conversations that were being had there. Sunday came and it came time for me to go tour the physical therapy school. I was like, no. I'm going to do this Ethereum thing. I don't know how I'm going to do this Ethereum thing or what I can even contribute, but I knew that this was the industry I wanted to be in. So it was largely a just exposure to Ethereum in real life that would really convince me to just absolutely abandon all previous like trajectories that I had in my life, and just I felt like I couldn't miss the opportunity. And so I went on full time on Ethereum in 2018. Started at an ICO advisory company. Still had the rosy color goggles on because in 2017 ICOs were going to change the world, and then in 2018 turns out they were all scams. But that's what got my foot in the door as like a writer. I was a blog writer / community manager for this ICO advisory company. That company blew up. And then a number of different token advisory agencies kept me going while I started my own podcast, POV Crypto, and with my Bitcoiner co-host Christian Corollas, who now works at Bitcoin Magazine, BTC Media. And then eventually just more and more writing and content production got me and Ryan connected. And eventually I started writing for the Bankless newsletter, because Ryan actually started the newsletter before Bankless LLC actually got formed. And so I got a lot of my writing out that way. And then I was pinging Ryan. It's like, Ryan, like, you should also start the Bankless podcast. And he didn't really think it was the greatest idea. He was skeptical on it. And I kept on like just nagging at him. I was like, dude, like, why haven't you started the Bankless podcast yet? And at some point in time, I was like, Ryan, I'll do the editing. I'll do all the like the back end like labor and get the podcast out the door. All you got to do is show up. And so that finally convinced him. And turns out that was a great idea, because the Bankless podcast is a pretty good podcast in my opinion. And so then we decided to make Bankless LLC in September of 2020, which is largely just the podcast and the newsletter, but with a bunch of other peripheral stuff as well. And that's where we are today.
So, fantastic story. I'm glad it worked out nicely, especially because at the time, that's a big risk. That's a big risk, just throwing aside the physical therapy plan and going into this crazy unknown industry. Coupled with the podcast story, you seem to really stick to a decision once you make it. What gives you so much confidence? Like, what made you able to take that risk at the time and dive into crypto instead?
Yeah, totally. And there's like an anecdote here as well, because I wanted to get into physical therapy because I'm really interested in physical movement and health sciences. I also graduated with a undergrad in psychology and wanted to also be a clinical psychologist. And there's a relationship there, right, between like your mental health and can you physically move your body without pain? Like, are you a fit individual? And that relates to mental health. And I was also into nutrition. And so I was trying to combine like physical movement, personal training, physical therapy with nutrition and eating well, because if you eat well and you're a healthy human, you have good mental health. And so these things all relate to each other. And so I wanted to make an industry that combined all of these things. But the problem was like the bureaucracy behind that was absolutely insane. I would need to get a graduate degree in one of these three things, and then like secondary schooling in another one of those three things. And then that's only two of the three things. Like, how do I get the third going? Just like doing compliance and just getting all the credentialing that I needed to do in order to establish the career that I wanted to establish. It was just an endless amount of credentialing, right? It's going to be like 8 more years of school, an insane amount of debt to do something that I thought that I already could provide value towards, but I couldn't because of credentials. And in the crypto world, in the Ethereum world, is very, very like anti-credentialing, right? And so in Ethereum, there are no regulations. There are no rules. There's nothing to really stop somebody who just has like an undergrad degree, or even who cares? Like the degrees don't matter. And so in the crypto world, there's no like gatekeeping allowing that's preventing an individual from like rising the ranks, right? All you have to do in the world of crypto is contribute, right? And that's what I wanted. That's what I wished my previous trajectory was. And in the crypto world, all you got to do is show up and provide value. And if you do that on a consistent basis, your career kind of establishes itself. That's what I found in the world of crypto. And so really the crypto industry was really a magnetic pull on me because of those reasons. Like it's a permissionless entrance. Like we live in a permissionless industry. And so, establishing yourself is much more permissionless than like the legacy system. And that as an environment, as like a culture, was much more attractive to me. And so it was once I figured out how to get my foot in the door, like the snowball just kept on going. It's like it just became the easiest decision after that.
I couldn't agree with you more. That sort of bureaucracy was made for a time when there wasn't this abundance of information, high quality filtered information that we have now. People have access to most of the scientific studies out there. People can learn the majority of university degrees from behind the laptop for free. So forcing people to go through that is definitely a problem. Although I'm not sure you've thought of this, but you could have made your own personal brand around the fitness, health, nutrition. There's that option as well, though definitely not, well, probably not as lucrative and insanely crazy as the crypto environment. And that content creation road led you to Bankless, and you explained how that happened. What do you view Bankless as? Is it a business to you? Is it a means of contributing to the ETH community? Is it a combination of the both? What does Bankless mean to you?
Sure. Yeah. And there's a number of different correct answers, right? Like Bankless is straight up a business, like it's how I pay my bills. But that's also a very uncreative answer. And so perhaps like Bankless is best illustrated as a stream of consciousness of both me and Ryan as we go down the crypto rabbit hole together. People talk about going down the crypto rabbit hole as if it's like this finite thing. No, like the crypto rabbit hole changes. Like if you went down the crypto rabbit hole in 2018, well, it got 2 years bigger, 3 years bigger since then, right? Like now we have DeFi, now we have like liquidity mining. What does that mean? Governance. Like the crypto rabbit hole keeps on growing, and so we keep on discovering it. And I kind of view Bankless as like, to some degree, like the deepest down the crypto rabbit hole that you can go, right? If you've listened to every single Bankless episode, like you kind of understand the deepest corners of the crypto rabbit hole. And so we're kind of, and I hope it's fair to say this, that like Bankless is like digging deeper down the rabbit hole. Like we are actually making the rabbit hole go even further, right? And so we are trying to contribute to the richness of information and education and analysis in this space. And something like Compound will release like liquidity mining or yield farming, and then we will go like, all right, what is the like socio-cultural implications of this? Like how does that change the world? And like how can we connect this to mental models that people already understand, and what is the logical conclusions of these things? And so you take the average event in crypto, and Bankless tries to integrate it into everything else we know about crypto, and then also extrapolate this into the future, right? And so if you are paying attention to Bankless, you're like following my and Ryan's growing and perpetually growing understanding of what this whole crypto thing is. Because crypto is like largely like the internet. When the internet was made in the 80s or 90s or whatever, everyone knew it was a big deal, but no one really knew why or what it would turn into. But people still knew it was a big deal, right? And so I find the same thing is very much true with crypto. It's like everyone knows it's a big deal, and we're all kind of like trying to figure out how and why. And I think that's what that's the role of Bankless is like defining why crypto is the biggest deal that it is.
That's a very fleshed out idea of what Bankless is. I absolutely love that description. And I mean, I've read a lot and listened to a lot of the episodes as well, and it falls in line with how you've described it. But one thing we love to talk about on this podcast is approaching these things from an entrepreneurial perspective. And what have you learned as an entrepreneur building Bankless from where it started? And can you describe that journey of what Bankless was and what it's become?
Totally. And also just to rewind a little bit, you asked why the decision to go into crypto was so obviously the correct one. And this is something I think everyone should take to heart. Like crypto is about money, and so like there's money in crypto, right? Like physical therapy or your previous job trajectory, it wasn't about like redefining money. And so to some degree, like the incentive to come into crypto is just that. Like in an industry that is redefining money, like there's money around. Like it's a pretty easy conclusion.
Absolutely. There's lots of money around in crypto. And if you're a part of what's one of the biggest financial revolutions in the world right now, you're probably going to be financially compensated for making that right decision. So anyone listening to this knows that that's 100% the way. And we care about money on this podcast too. Our newsletter, Market Meditations, is all about building wealth. And crypto just happens to be one of the best avenues to do that right now. And that's the side which we focus on very strongly. We're fascinated by what different entrepreneurs build in the space. So Bankless, you guys are fantastic entrepreneurs. You've got Gary Vee on your podcast. You released the Bankless DAO recently. These are great business moves. So I want to dive into the journey of Bankless. So what did you learn as an entrepreneur? What mistakes did you make? Describe that journey to me.
Right. I think one of the reasons why Bankless has been so successful is pretty well summarized by and I'm patting myself on the back here, so take this with a grain of salt. But Vitalik's article on legitimacy talks about legitimacy as a social force, and Bankless to me is like a very inside out organization, right? Like when you listen to the podcast with me and Ryan, and like you just listen to what we talk about on the weekly roll-ups or our debriefs. You're following along in like you're inside mine and Ryan's brain. And so we think in an inside out fashion. We think out loud. And that's largely to some degree what Bankless podcast is. We think out loud. And we do it transparently. And we do it in a way that I think is aligned with the industry as a whole, right? Like, like sharing knowledge for free, right? Like Bankless is a public good. 95% of the content we produce is free. The extra 5% is just like, if you really want that extra 5%, like, yeah, you get the podcast debriefs, which I think are actually extremely valuable. But it's a public good. We're learning out in the open. We're learning together. We're doing our best to synthesize information, and to some degree, like, that adds to the legitimacy of Bankless, and legitimacy as a social force, legitimacy as in like a bunch of people all agree collectively, the human hive mind, the human collective, all agree that something is or is not legitimate, right? Like Vitalik's favorite illustration of this is the Steam content production platform, which Justin Sun like cornered the market on, and then tried to co-opt it as part of the Tron ecosystem. And then all the Steam users were like, no, we're going to fork it and go over here. And so like Justin Sun bought all the tokens and then tried to co-opt the Steam platform, but then the people didn't follow him. The people just forked it and went elsewhere. So there was while Justin Sun had all the tokens, he had all the legitimate tokens, he did not have the legitimacy to control the platform. And so the people chose what was legitimate, right? And so, Ryan and I, we are content producers that in 2017, there was a lot of content producers that like pumped their bags and did a lot of self-shilling. There's a lot of like just nefariousness going around in this industry. And so Bankless as a podcast, as an ecosystem, we established trust with our listeners by being consistent, providing good information, but being extremely transparent about how and why we think what we think. And so like that, establishing that trust in an industry where like there's a lot of like monsters that are hiding, that are trying to eat you in your bags. Bankless is like a safe haven of like, oh, I don't know about like the information I just got from like this one esoteric like YouTuber with like 5,000 viewers or whatever. But like the Bankless podcast, I listen to them every single day. They're transparent. I trust them. Like and so to some degree, like, and the extension to the industry is that like people that succeed in this industry are legitimate, right? They are trustworthy people. They are providing value to the rest of the industry, largely for free. Like they'll put their innovations and thoughts out there. And so, DeFi is like this money Lego ecosystem where all these money Legos can connect together. And the more surface area for connections, the better your application is, because more people can build off of you. And the same thing is true for like entrepreneurs and just like education and people trying to build a brand in this space. Is like when you are collaborative and you help other people help you. And this is true for every single industry, but it's like on steroids in crypto. And so like that's definitely something that I've learned that really just helps basically everyone in this space, is like be honest, transparent, and open and collaborative, and you establish your legitimacy and trust. And if you just add in just also providing a little bit of value, like it just goes a long way. And then also consistency, like you need to be doing this with frequency. But as an entrepreneur, like legitimacy is one of the most powerful things that you can have blowing into your sales.
It's incredible. My journey was almost entirely similar to that. Joined late 2018, where almost every piece of trading content you had to pay for. You had to pay $300 to $2,000 for. So instead, just made a free course, put it on YouTube, absolutely exploded. People loved it. And from there, you just continue to provide free content, occasionally just legitimately sell stuff, but keep it to a small proportion. Even as a business decision, Bankless, I think, would do way worse if you guys monetize, say, 40% rather than 5% or even 30%, because in an age right now where information is so readily available, it's better to give information out for free. And that builds the legitimacy, the trust, and makes people want to put resources into this thing they like, and it naturally builds up from that. One incredible thing you guys did recently was with the Bankless NFTs getting released, and the Bankless DAO as well was awesome. Could you talk a little bit about that and how that happened?
Yeah, totally. To some degree, like neither Ryan and I are interested in building out like a massive company. Like we don't want Bankless to turn into like CoinDesk or The Block. Like I'm not a manager. Ryan's a pretty decent manager, but it doesn't mean that he enjoys it, right? So we have a pretty small team of basically 5, and some of those people are part-time. And like I don't really want the company to get that much bigger. Like that would be too many moving parts. Yet there are so many people that would like ping me and Ryan and be like, hey, like, I love what you guys are doing at Bankless. How can I help? Like, how can I help contribute? And to some degree, you get people like that when you are like open and free and collaborative and transparent. Like, people want to like, join the team, right? Just because of the legitimacy that you've established, the brand that you've established. And like, so many people would reach out to us and like, I want to help. Like, how can I help you guys? And to some degree, it's like, well, we would love to help, but we also don't want to manage people. And so we wanted to give the people that believed in us, believed in the Bankless movement, were part of the Bankless movement, because the Bankless movement is a movement of people, by the people, for the people. We wanted to give them the surface area to actually contribute to the movement, right? And so that's what the DAO is. Instead of growing out the LLC into like an organization that really, helps proliferate the Bankless revolution, we just gave the power of the Bankless revolution to the DAO. And so we minted a token, and the social contract of the token is that the token is for proliferating the Bankless meme, like the Bankless revolution. And we gave that token to people that paid for the newsletter and contributed to the Gitcoin, and basically proved that they were in the revolution for financially, right? Like, you paid Bankless LLC money. And so that showed us that you were ready to commit to the Bankless like revolution, right? And so we give like mint a token, give it to all these people that are verifiably part of the revolution, because they are the most aligned with the revolution. And now there's this token out there that all these same like-minded people all own, with all the same goals. And now we call that the bank token. That's the Bankless DAO token. And now the Bankless DAO is now its own Discord channel. It's one of the most active 𝐏𝐸 like Discord channels I've ever seen. The sheer magnitude of channels out in there is absolutely insane. There's like, let me pull it up and I can list off the number of guilds. There is the let's see, there's the audio video guild, developers guild, design guild, education guild, legal guild, marketing guild, ops guild, treasury guild, writers guild. And so like, if you have skills, you just go into your corner of the DAO and figure out a way to contribute. Things are still like pretty new right now, but then there's also the cross collab guild. So like, if the writers guild needs to collaborate with the audio video guild, like they can do that. And if like the writers guild needs like a dope graphic, they can go to the design guild. And so it's very much like a company org. It looks like an org chart, and it looks like a Slack channel, but it's in Discord and it's open and permissionless, like quote unquote permissionless. It's a little bit hazy with like the Discord. Discord's a centralized company, but whatever. And so this gives the opportunity for people who want to build out Bankless, but also now I don't have to be a manager. People can manage themselves. So that's the vision of the DAO.
What an interesting experiment. I'm so eager to see how this turns out, what issues or great successes arise from it. So we'll be paying close attention to that one. As the crypto industry continues to mature, it's natural that more and more wealth building platforms will arise. The problem with many of these, however, is that they are often so complex that it disincentivizes people from using them. This is why I've partnered with Nexo, one of the top crypto lending platforms in the world. With over 1.5 million users and 15 billion assets under management, Nexo combines the yield earning features of crypto with the familiarity and ease of centralized finance. Nexo allows you to earn interest at a competitive rate on crypto and fiat. They also allow you to take out loans using crypto as collateral so that you have access to cash without needing to sell your investment. You can even trade directly on the web platform and mobile app in an intuitive and secure way. If you're looking to embark on the journey to financial freedom whilst minimizing time and frustration, I highly recommend you check them out by visiting nexo.io. That's nexo.io. One of the biggest problems in the crypto industry right now is that there are far too many applications and none of them are very user-friendly for beginners. That's why we've partnered with Exodus. They're a desktop and mobile wallet that allow users to own their own private keys, navigate a very easy interface where they can view their portfolio, store multiple different cryptocurrencies, as well as exchange and earn interest on those cryptocurrencies. So if you're interested in checking them out, head over to exodus.com. That's EXODUS.com. David, to switch gears a bit, I'd like to talk a little bit about DeFi and the immense wealth building opportunities that are present, but seemingly diminishing in DeFi right now. There's a lot of money you can make in DeFi simply through lending out, automated market making, but returns have been steadily decreasing. Do you think this is a sign of a future trend or simply a result of the current market conditions?
Yeah. The longer you've been in this industry, the more upside that you have. The shorter you've been in this industry, the more volatility you've experienced. It's always volatile in the short term, and the trend is your friend. In the long term, you tend to make money. And that at worst, that long term is 4 years. So if you bought the top, you're in the green 4 years later, like give or take. And so to some degree, like waiting it out has always worked in crypto. At some point that probably has to change because markets need to mature. And I think one of the reasons why we are seeing a shorter bull market than what people were anticipating or expecting is because we had a cohort of sellers sooner than what we expected. But having a cohort of sellers is also a sign of market maturity, right? Like Ether went from $80 in March of 2020 to $4,300 just a couple months ago. Like, damn, like we need some sellers. If we are going to be a global market with global liquidity, like at that point in time, like sellers need to step in. And that's kind of what I think is happening right now is like we are witnessing our first like churning event where people aren't holding until the moon. They are holding because they're selling because they got a 5x, and a 5x is great for them. And so I think that's one of the reasons why we've seen a downturn in the market lately. Do I think a bull market's still on? To some degree, yeah. But also, like anyone who has an opinion about whether a bull market is on or off is still speculating, unless they have some deep experience with analysis and they can explain things better than I can. But to some degree, like the power behind DeFi is inarguable. The money Legos of DeFi is something that we've never been able to have before. And to some degree, we always have to remember the fundamentals. And I can list off the same fundamentals that everyone talks about, like permissionlessness, openness, like the collaborative nature of these DeFi apps, the programmable store of value. And to some degree, I would just ask people who are like looking at this market and be like, oh, like, is this bull market over? It's like, you just got to wait it out. And I don't know if you're going to be waiting for 1 week or 1 year or 4 years, but like so far it has always worked to wait it out. And that's really where and really to some degree, like if you are convicted about Ethereum, as convicted as I am, as convicted as Anthony Sazzano is, as convicted as Ryan is, like to some degree, you actually want the most brutal like bear market possible, because wealth is established in bear markets. Wealth is expressed in bull markets, right? Like if you pay your dues in this industry, and by paying your dues, I mean like you stick it out through the bear market, you accumulate quality crypto assets, you establish yourself as a person in this industry with a brand and contributing value and like start to generate some sort of career for yourself in a bear market. It's when it flips bullish again, like everything is on easy mode, right? Like you were accumulating cheap assets, you were sharing your time and energy and conversations with people who also were sticking it out in the bear market versus the crypto tourists in the bull market. And so if you are as convicted as I am, you want a bear market. You want like sell me $0 Ether. Let's have the Ether go to $0 so I can buy all of it. Like to some degree, like that's what you want. If you are convicted in this industry, if it goes up too fast, too quickly, like a lot of people get left behind that we could have brought into this industry. And bear markets or just quiet times or lulls in the market are the opportunity for these people to like establish themselves.
David, have you heard of a token called BND or an NFT project called Chainbinders? You would absolutely love this if with the strong conviction you guys have. They're NFTs with built-in Ethereum liquidity. So it's a smart contract where you can burn your NFT for an associated Ethereum value. And the first people to burn it get reduced amounts. And the reserve pool continually increases the longer you hold this. So it's
Oh,
a
it's a little
fun
game.
way to
Okay.
have a yeah, it's a game. It's a fun way to have a long Ethereum position. Something Bankless might enjoy, the way you were talking about the long-term nature of wanting to buy, even if it goes down to zero. It sounds like, do you guys ever plan on selling Ethereum?
Well, so to some degree, like I dabble with leverage, and so I have to sell if Ether to clear out the leverage. But I mean, no, no, and one of the reasons is because Ether is in this very privileged position to as an asset, right? DeFi is this march towards capital efficiency, capital efficiency, capital efficiency, capital efficiency. We started DeFi started in 2018 with MakerDAO, 150% over collateralization limit, 13% liquidation ratio, and like interest rates that vary between 1 and 20%. And then now we have this brand new protocol. I'm just picking one of the many I could list right now. Liquidity, 110% collateralization ratio, 0% interest rates. They charge a fee upon like originating a loan. But like, and then we can also talk about Uniswap. Uniswap and concentrated liquidity, it boasts a 4,000% capital efficiency improvement. Balancer V2, you can deposit assets into Balancer to get liquidity fees, like exchange fees. But then it's also lent out in Aave at the same time. DeFi always gets more capitally efficient. And Ether is the pinnacle of that. Ether is the asset that receives the most tailwinds of this fight for capital efficiency. And what is an asset that receives all of the exposure of the capital efficiency of DeFi? It's the most capitally efficient asset in the world by definition. And so if DeFi works, you should never have to sell your Ether. It should just be this collateral asset that allows you to do anything that you want, because it always receives the most tailwinds of most capital efficiency. And so if like, what is there to sell to? Like, what am I going to sell it for dollars? Dollars aren't capital efficient. Like dollars go down in value over time. Ether goes up in value over time because dollars get printed. Ether becomes more capitally efficient. Like it's just the fundamentals of Ether, in addition to like the whole ultrasound money thesis, which is about Ether at the protocol level. Ether at the application layer, like it only gets more and more useful. And while dollars are devaluing, Ether is getting more and more useful. And so to some degree, like, no, you should never have to sell your Ether. You all like maybe you want to improve your life, right? Maybe you want to get a house. Maybe then you sell your Ether to do that, like to actually change your life. Because like if we just buy and hold these assets without improving our life, then what are we really doing here? But other than that, like no, like holding until the rest of time.
That is some strong conviction you got there, David. And they often say you should, if you can strongly hold one side of an argument, you should be able to argue the other side stronger than the opposition. So, David, I want you to go Jekyll and Hyde on me right now. What is the strongest bear argument that you could possibly give for Ethereum, a case where it just fails?
The thing that always looms in the back of my mind is like composability is fantastic. It's one of the strongest fundamental things about Ethereum. And it's like a commitment to having just a massive Achilles heel, right? Like, well, if we are super duper composable, then like, so is all the risk, right? Well, composable monies, but also composable risk. And so as DeFi gets more and more capital efficient, as I was just saying, the risks also become more and more massive, right? If everything in DeFi comes to become one of my theses is that all of these money Legos come to become the same structure, and that's really cool because that structure is the most useful, capitally efficient, programmable structure of all time, and all of the risk gets intertwined and shared amongst the structure, right? Every single DeFi Lego that plugs into each other, they all share risk. And so like I was talking to one of my friends who used to do oracles at MakerDAO at the Maker Foundation. Now it does his own oracle company. I was like, over the next 5 years, what's the likelihood that we have just a massive black swan event that like collapses the whole entire thing? And he goes like, almost certainly. almost certainly. And so it's really going to be like a question of, can we pick up the pieces afterwards? That's one bear case. The other bear case is that I mean, that's kind of my only one. That's all I got. I mean, there's like execution risk. Like maybe the merge doesn't go right, and so like maybe we lose some of the trust as the ETH2 developers lose some of the trust in the market, and the market is just bearish on being able to execute. Maybe we push out the merge just like another year, and that takes too much time. But ultimately, like to some degree, I guess I'm failing this test of being able to like provide an ultimate bear case, because even if in the scenario of like ETH2 not being delivered, I still think it'll just be delivered later. Like maybe we didn't get it in 2021 or 2022 or 2023, but it's coming. Like ETH2 is coming. Maybe the most bearish version of this is like maybe it doesn't come until 2025. I just don't think that's going to be true, but that is like a legitimate bear case, I guess.
Uh, Literally, as you were talking, this came to mind. What if do you think, if anything, like there's a lot of faith in Vitalik right now with regards to Ethereum? Do you think if something were to, God forbid, happen to him, that could be some sort of doomsday scenario? Ethereum could take a strong hit and be set back a few years from it?
Totally. I mean, it's just to some degree saying like Ethereum will be set back a few years from like the death of Vitalik is what I'm guessing we're talking about. And a
Theoretical
story,
scenario.
fake story. Well, I'm losing the word here, but well, Ethereum as an ecosystem is moving forward at its own pace, and Vitalik has kind of like transcended into this more of the, like this spiritual leader of sorts. He doesn't really code too much anymore. He doesn't direct traffic at all. He hasn't directed traffic with regards to Ethereum in a really long time. I think he's just doing like he's doing research with cryptography in his own time. And then at some point in time, it comes time for the research that Vitalik's doing with others gets built into the Ethereum protocol. Like he just made this post like there was some innovation on like Merkle trees, Patricia trees. I think he called it V trees or something that makes something about Ethereum more efficient. Maybe in 2 to 3 years, it actually comes time to actually integrate that into the Ethereum protocol. But right now, like in the near term, all of Ethereum is led by the client teams, both ETH1 and ETH2. To some degree, the Ethereum Foundation, Danny Ryan, like leading the coordination of ETH2. And there isn't really any place where Vitalik is like, if Vitalik disappears, like, oh no, like we grind to a halt. No, that like Ethereum is beyond that. There is no place where there is the dependency on Vitalik. If Vitalik did like die in some freak accident, God forbid, like I do expect the ether price would absolutely plummet. That would be a terrible loss to the ecosystem. Like one of the reasons why Vitalik has stuck around for so long is because his ideas are really good. Like it's not like we have this benevolent dictator that we just like we just hang on every single word because of some sort of like, you know, God complex about this guy. Like no, it's a meritocracy, and every idea that Vitalik has is a really good idea. Like Uniswap, that was Vitalik's idea. Like one of that was a brainchild of him, right? Like that was a really good idea. Somebody else implemented it, but it was his idea, right? EIP 1559, actually Vitalik's idea. Again, implemented by somebody else, but it was his idea. And so to some degree, we want Vitalik around to keep on having these ideas, and losing him would be a terrible loss because we wouldn't have these ideas. And I suspect that in a freak accident where Vitalik died, the ether price would drop just because of like the reaction. And traders are going to make this even worse, right? Like, so traders see the headlines, Vitalik dies, they're like, oh, that's going to spook a lot of people. I'm going to sell. That selling triggers more selling, but it'll be a short-term event. Like it'll rebound. I'll be buying that dip as hard as possible because the Ethereum fundamentals don't lie on Vitalik's shoulders. They lie on the Ethereum community.
You always say in entrepreneurship how ideas are worthless. It's execution that matters. I think that applies to Vitalik. The ideas are too brilliant, the ones that come from him. So interesting to see an exception to that rule. David, I'd like to explore one more topic with you, and that is, do you think there's a room for other smart contracts in the ecosystem that specifically ones that sacrifice decentralization, become a little bit more centralized in order to offer features that Ethereum doesn't. For example, taking Solana as a random example, has 50,000 transactions per second. To achieve this, it sacrifices a certain level of decentralization. Do you think there's a place for these in the medium and separately the long term?
Yeah. So I think really the question is like other smart contract L1s, other layer ones. And to some degree, I'm kind of skeptical as to other layer ones because you can just do the same thing. You can make different decentralization trade-offs on an Ethereum L2. And so in practice, it can be the same exact thing. But if you're a layer two to Ethereum, you get to tap into all the cool things that make Ethereum Ethereum, right? Like not only do you, if you have a, say you have an argument for like why Solana, I can then make that same argument and then also add in, well, I'll just fork Solana and then I'll hook it into Ethereum and it'll be an Ethereum L2. So same Solana, same architecture, same trade-offs, now an Ethereum L2. And now I have the same argument that you just made about Solana, but now I get to tap into all the assets, all the liquidity, all the money Legos that are on the Ethereum L1. And I have all the same arguments that you just made about Solana. And so to some degree, it's like, yeah, I do think there are places for other smart contracting platforms as an Ethereum layer two. Like that's to some degree, that's kind of the point. And that's kind of the point of what Ethereum tries to be at the layer one level, right? Like Ethereum, much to Bitcoiners' demise, taps into a lot of the same properties that Bitcoin does, like slow shipping containers at the base layer, like maximize decentralization, maximize permissionlessness, so that you can optimize and have optionality as what you want to optimize for on the layer two, right? And so, if you want to trade off decentralization and centralization on the layer two, that's great. And the Ethereum L1, which is hyper secure and hyper permissionless and hyper decentralized, that allows you to make those choices. And then you can make in Ethereum as a layer one can traffic control value and tokens and assets and smart contracts between these layer twos with robust security because of what it is at the layer one. And so like maybe the Solana version on layer two wants to communicate with the Tezos version of the other layer two. And the Ethereum as the base layer protocol allows for decentralized value transfer between all of these layer twos. And so every time there's an argument for why there needs to be some sort of trade-off, I'm like, yeah, let's put it on an L2. And then we get to have all these different arguments for these different trade-offs as layer twos. And Ethereum just varies value and money and assets between all these things.
But that's a pretty fantastic argument. And from your reasoning, it doesn't sound like there's any need for other layer ones. Could you present any argument for why we'd want other layer ones besides Ethereum?
Yeah, well, so I mean, Bitcoin needs to stay as a layer one because Bitcoin needs to be Bitcoin. That's its job. And then to some degree, this is testing my my knowledge of computer science and distributed systems, which isn't the greatest. But to some degree, I definitely think there could be a case to be made for an application-specific blockchain. This is what Compound is doing. This is what the vision behind Cosmos is. I think I can kind of make the same arguments that I just made about that for the layer two, but to some degree, like I don't know enough to as many of these engineers do as to like the trade-offs. I'm more of a high level thinker. I can understand most things, but not all of them. So to some degree, like I kind of at that point will have to put faith in the developers who are building out things like Cosmos or Compound's version of an application-specific blockchain called Gateway. I'm sure there are good reasons. I can't articulate them. I just don't know.
Oh, well, appreciate your transparency, which is what Bankless is all about. I similarly don't have that much knowledge, although I'm quite proud of building a fantastic rock, paper, scissors game on Python one time. So, it's pretty decent knowledge there. David, we're all about building wealth outside of crypto. Final question. Where do you like to look for investments outside of crypto?
Yeah, I think the natural like barbell to crypto is real estate. people I've had this debate with some of my friends is like whether like just dollar cost averaging into the S&P 500 is like the antithesis to crypto. Like crypto is like, yeah, I'm trying to get my 100x, trying to become like a crypto millionaire. Everyone wants to do that, but then once you do that, you have to like diversify to lock in wealth. I think the logical antithesis to locking in wealth is real estate, right? Because I mean, there's a reason why there's the word real in real estate. Like it's a real asset. Like it exists in space and time. Ethereum doesn't exist in space and time. It exists on the internet. And so while we all have our cool internet money, and we have this high conviction on this thing that could like 100x over the next like 10 years, if you the appropriate space to lock in value and lock in profits, I think is real estate, because the financial system is built on rocky, shaky foundations, like the current financial system. The S&P 500 built on the dollar, built on a settlement network that the Fed has to like manually operate, and so to some degree, like exposure to the S&P 500 is kind of exposure to the thing that crypto assets are trying to like disrupt and destroy, right? Like we want the creative destruction to happen. And so to some degree, like the creative destruction happens by Ethereum sucking the life out of the S&P 500, right? And not like literally, but just, to some degree, it's like all the cool things about the legacy financial system, Ethereum wants to disrupt. So why would you invest in the legacy financial system? So like to answer your question, like real assets, like gold would fit in this category. I don't really think gold's all that cool. But like, and that's why I kind of think real estate is. It can be denominated in any sort of asset, right? And so like we can denominate property in like Ether or Bitcoin terms if we really want to, because it's a global liquidity network of money, and it's cash flowing, right? And so not only can you live there, but you can rent it out, and so the value of the dollar. You don't actually have exposure to like the value of the dollar if you own real estate. You have exposure to real estate, and your rent, the rent that you charge if you own real estate can fluctuate up and down based on the value of the dollar, right? So the value of the dollar is separate from the value of real estate. And so I guess my Bankless _𝐎𝐿𝐴 hat is coming out here, but like if you have crypto assets and you have real estate, like you are totally independent from any like, black swan event that happens in the legacy financial system, which is the thing that we're trying to disrupt anyways.
David, thank you for your time. Adored your energy. It's been fantastic talking to you. Do you have anything you'd like to leave our listeners with before we close out this episode?
Yeah, totally. So we announced this on a Tuesday, something new out of the Bankless ecosystem. Listening to, if you're trying to keep up with this industry, like working includes like listening to podcasts and reading blogs and like watching YouTube videos, right? Like that's somewhere where the best information comes out. And so like if you are not doing those things, you're kind of falling behind. But that's also a little bit of a shame because like there's no way to like be in this industry, but also like chillax, right? Like how do you consume content without it being work? And so out of Bankless, we released a new show called Top Signal. It's the first episode is coming out next Tuesday evening. And it is specifically entertainment and comedy focused. And so I'm bringing on my buddy, Michael Wong to be my co-host. And so we are trying to generate like kind of a whose line is it anyways, around the horn, Saturday Night Live skits and like prompts and fun little games that we're going to play. And it's specifically entertainment only. And so we have this tagline where everything we say, we don't fact check anything on Top Signal. Everything we say is in a superposition of a shitpost, the best alpha you've ever heard, a complete fabricated lie, or just a normal statement. It could be any one of those things, and we don't know which. And so, like, I think that's going to allow a lot of people to just like, consume what I'm calling a content comfort food. And it's something that this industry really, I think, needs because we have a lot of culture in this industry, and I don't think we have enough venues to express that. And so I want to create a place where some of the top minds in crypto and DeFi and Ethereum can come to Top Signal and just like turn off their founder's hat, turn off their builder's hat, and like just vibe, just like chill out and have a good time with the other builders in this space. And so that's coming out of the Bankless ecosystem and should be our first episode's coming on next Tuesday.
That sounds like a load of fun. Who's the first episode
Hopefully
on Tuesday? Can we know yet?
We got DeFi Dad, Kevin Owaki, and Anthony Cesano as our first 3 guests. Yeah.
I absolutely adore DeFi Dad, so definitely going to
We
be
all do,
tuning
yeah.
into that episode. Yeah, he's a legend. He's helped me out loads. Lovely guy. David, thanks again for your time. We'll end that episode there. Meditators, see you next time for another episode of the Market Meditations podcast. He also covered how quickly the space moves and how difficult it can be to find consistent and quality information to keep us up to date. This is exactly why I have my research team write 6 free Market Meditations newsletters a week. It covers the latest market news and educational content to make sure you never fall behind. To access this, all you have to do is go to 𝐏𝐸𝐺𝐻𝐾.substack.com. If you enjoyed this episode, check out my conversation with Ryan Sean Adams, the other founder of Bankless.